Good morning, everybody. My name is Gareth 𝗶𝘁𝗶𝘁. Welcome to the game plan. It is that time, 9 a.m. Eastern here at 𝗶𝗧𝗿𝘂𝘀𝘁. We're going to get into the charts, we're going to get into the levels, and we're going to get into the trading opportunities. So without further delay, let's step right over to the big board and let's take a look. So first thing on a Monday morning, what am I going to do? I'm going to look at the U.S. 10-year. The 10-year, what is it doing here pre-market? We can see that the 10-year is grinding up just a little bit. It's still underneath that key 5% level. Now remember, folks, we talked about this last week. The 5% level right up here, that is the level to beat at this point. As long as you stay below 5%, you go on the bearish side. It doesn't mean you're going to get a big move down. I honestly don't think you'll get a massive move down, but you respect resistance until proven otherwise. So again, that's number one. So right now, yields are inching up a little bit, but we're still below the 5% level. The dollar, let's take a look at the intraday dollar. Look at the dollar here. The dollar actually having this beautiful kind of down move, inside bar, bear flag chop, and then continuing lower here. Now again, one of the unusual things here is that the dollar is actually moving opposite yields. Now you might say, well, why is that going, why is that occurring? Because usually the dollar was rallying when the yield was going up. And the only thing I would say here is you have to understand the U.S. has to sell a ton of debt out there. They have to basically sell a bunch of treasuries. They're like, I think 1.5 trillion in the next couple months. And you have to look at it and say, okay, that's more money being essentially printed in a way, but at the same time, how many countries are eagerly rushing to buy our debt? And that's the key. There aren't a lot. So interest rates are going up, but the dollar is starting to descend here, and that's an interesting potential divergence that we have to keep an eye on. Now, quickly jumping over to the daily chart, I continue to be in the camp that the dollar has put in a mid to long-term high pivot. And again, the reason I'm saying that is because I'm using this trend line, right? We have this beautiful long-term trend line going all the way from the lows of 2021 all the way through these pivot points. Notice how we broke below it. Remember, this was support, right? So this is support because we're above it. When we're above it, it's support. And here it's support, then it bounces, it breaks. Once support breaks, it becomes resistance. So now, once we got below here, this now becomes resistance, and so on and so forth. So even if we, let's say, rally back up, this is still going to be resistance until proven otherwise. And notice how I'm using that term, until proven otherwise, meaning that I am not a 100% trader. I am never going to be that. The point is the charts give me probabilities, and I go with what the charts are saying. I don't rely on my gut, my heart, my feelings. Feelings don't matter in this game. Always remember that, guys. That is really important. The market doesn't care what you want. It is going to do what the probabilities likely are suggesting, and that's where we have to trade. We have to trade within that. Okay, so number one, let's flip over to the NASDAQ 100. NASDAQ 100 on Friday and Thursday, we did see a breakdown. Right now, again, we are seeing, it looks like a little bit of a bounce on the NASDAQ on Friday. We did see some of the tech stocks up. Amazon rallied on the back of earnings, but we are still below this key level. Now, based on probabilities, what does this tell us? Right now, the S&P and the NASDAQ are up pre-market, but as long as we stay below this level, probabilities continue to give us the probability factor that we're headed down to this level. There's a downsloping trend line right here to right here, and then there's this secondary line coming in from all the way over here and back. They're converging right around this level, this 330 level. That is the level. Even if we get a bounce this week and we have Apple earnings, we have the Federal Reserve, we have the non-farm payrolls report, we have all these things this week. So you could always see some sort of bounce. But as long as the market stays below this level, you assume eventually, within a week or two, we are going to come down to this lower level. Now, that doesn't mean, by the way, that there aren't long opportunities. If you're a swing trader, I'm going to go over some charts that I like today in just a minute on a swing trade basis. But you have to understand that the charts, again, we've broken this line. The next major support is here. Even if we bounce a little bit, you ultimately would assume, based on probabilities, that the market will go lower. All right. So that's your QQQ chart. Flipping over to the SPY. Now the SPY, fascinating here. Yesterday, or I should say Friday, we did see this breaking and closing below this key level, right? So we did see it close below that line. What that does is it shifts probability. So as long as we were on top of that line, it was probably about a 70% chance, right? Versus a 30% chance of a break point. So meaning that there was a 70% chance that we would bounce here. Okay, now once we close below, the probabilities begin to shift. It doesn't go from like 70-30 to, 30-70, but it starts to adjust. Basically, you're closed below the line. You give the market one chance today to recapture that line. And again, at this stage, you're now probably at 50-50 probabilities that you can recapture or that you continue down. If you continue down, where is our next level? And this is very standardized. I love this about technical trading because, again, once you let yourself be reliant on the charts and not yourself for your emotion and all this other things, it really becomes simple. It's just like, okay, what is the new probability based on today's piece of the puzzle? Remember, every day you're getting a new candle. And this is where you have to understand as technicians, you change from being kind of someone who is hoping to saying, okay, I got a new piece of the puzzle. Now, how does that shift what the chart is telling me? What is the new chart, this new puzzle showing me? And again, every day we get a new candle on the daily chart. The 10-minute chart would be every 10 minutes. You're getting a new piece of the puzzle. It's your job as a technician to look at the chart now and not go with what you were hoping would happen, but go with the reality of the situation based on what it's telling us, all right? So inevitably, do I think we're heading down here? Yes, I do. I honestly do. I think that's where we're going to go eventually, but it doesn't mean we can't have a short-term bounce. Like in theory, check this out. So we had this level down like this. We bounced, we broke. We could retrace to the scene of the crime before going down there. That is a possibility. But remember, based on Friday's close, it's now 50-50 probabilities of that happening versus previously, before that close below, it was 70-30. All right, and again, everything we do here is probability based. All right. So ultimately, if we zoom out on this chart, you guys can see where this line is coming from. And again, that's why the target zone is the target zone. Right here at 400 or 398 on the SPY, we can simply see that it just is utilizing the COVID low to the October low. And that gives us this little level here, which would have been that move down. If we continue down, that becomes your major technical support. All right, on we go. Let's keep going through here. Let's talk about some trades this morning. So we have SoFi reporting earnings pre-market here. The stock is actually rallying pretty nicely higher. We closed on Friday. Looks like we closed around 685. We're trading at 750. That's about a 10% move here. So nice little move. Now what I do is I say, okay, it's up 10%. Is there a trade here? Number one, you wouldn't think about going long. No, you don't chase. Never chase. What I do is I look at the daily chart and I say, okay, now would there be a shortable opportunity? Is there a level that this stock, if it continues to rip up, where would I potentially short it? And to do that, simply we take the recent levels and we start putting in trend lines. So let's put one in here, okay? That gives us a level right there. And we have this flat top right here. So those would be two levels that you could look at. I'll tell you what those levels are at this point. The question is, would there be any others? And I would say no. All right, so let's talk about these levels right now. Okay, so first level, very simply, take that high, connect it to that high. It's right above $8. So the stock currently is trading around $7.56. It's up about 10%. If this were to get even more extended on an intraday basis and print the even number of 8 and pierce it, there might be a quick scalp opportunity. Remember, scalps, you're in and you're out very, very quickly. You're not looking for big gains. You're looking for 10, 15 cents on the trade. It's called a day trade. A scalp is another term for a quick day trade. All right, if it continues through that, your next pivot point would be this high, and that is at $8.65. So very quickly, I've isolated down the two levels where I personally will be looking for potential day trades today on SoFi. You might say, oh, but it's at $7.56. It would have to run almost another 50 cents to get there. That's fine. I only want, and this is the key with a good trader, you only want to take a trade if it's at the utmost probability of your success. Because if you're going to force trades at lower levels, like down here, let's say in this range, and you're just going to do it because you want to do it and you need action, you need that fix, then you have to really understand that you're going to put yourself in harm's way and you're going to take losses. These are traders that do it arbitrarily. They will never survive. They'll lose all their money. That's just the nature. Remember, day traders, by the way, out of every 100, maybe 5 will win. Maybe 5 will be in the game long term. Everyone else loses their money because a majority of people just say, oh, this is up a lot, let me go short here. Or this is down a lot, let me go long here. And there's no method or reasoning behind it. That's where the charts, when you learn the charts, you actually get the probabilities to be in your favor versus, buying randomly. Maybe you're at 50-50, right? Maybe 50-50. Now, you might say, well, 50-50, that's like a casino. Yeah, it is. Maybe sometimes you win, maybe sometimes you lose. But the problem is, that's based on this. Then throw in the emotional roller coaster where the market does everything it can to push you to your limits. And it now becomes the chances of your survival, if you're just randomly doing it, are probably about 25% win rate, right? So again, 25% at best. And again, that's just horrible and explains why majority of traders lose money. It's all about having factors behind it that are proven, proven methods. Okay, on to the next chart we go here. As we continue through, we have WDC reporting earnings this morning. That stock is also rallying to the upside. Look at this nice little move on WDC. Now, this is a semiconductor stock. Now, the positive to a semiconductor is it can help the whole market. Because again, if one semiconductor has good earnings, maybe it helps the whole sector. So we have it right here, basically. You can see Friday afternoon, it kind of dumped out, closed here on Friday, and then is gapping up today. So it closed around 39. It's up about $5. Looks like about a 10% move, trading at $44 and change. Let's flip over to the daily chart. Are there any levels here? All right, I do see one opportunity here. Actually, 2 opportunities, but they're pretty close to each other. One would be taking this pivot right here and connecting it through this recent high here. That's at 46. And the second one will be taking that lower pivot and dragging it up and is around 47. So you guys see what just happened there? I just gave myself a possible area with 2 trend lines converging off of that level. And that, again, is at a level of around 40, give or take high 46s to 47. And again, just to draw that in, right in this area here. So you have your double top, you have your downsloping, your upsloping trend lines, all of them converging. I'm going to say 47. If it pierces 47, there might, I repeat, I might decide to take this as a short trade. But again, I'll have to reevaluate it in the live day trading room at inthemoneystocks.com. Last one for pre-earnings here is on semiconductor, another semi, and this one's not doing so well, folks. So one semi, WDC, is rallying, the other is getting trounced. Basically, what we see here is it closed around 83 and change. It's trading at 72. That's over 10% drop here. This is a nasty one. Let's look for technical levels here. So what we do is we know it's trading around 72 or so, so we start looking. All right, so there's a gap fill. There's a gap fill right at 72. I don't really like that. So right here is a gap fill. Now, the reason why, gap fills are usually amazing, but when a stock trades at their pre-market, there tends to already be a pseudo hit of that level. And that makes me nervous about that level. So instead, what am I going to do? Well, let's try to find some other levels. Let's see what we do. What if it dumps out a little bit more? What's this low pivot right here? Let's drag that trend line across. That's at $67. So 67 would be a little double bottom. If we zoom out on the chart, let's see what else we have here. What if we take a trend line, let's see, from here through this low here? That would be the COVID low, or actually, no, check that. That's pivot low to there. That comes in around 62. So there's 2 levels there. Then you have a pivot low right here, which is right at that 61 level. So it looks to me, if this were to continue, and it's still got a ways to go to get down there, but first level I would be interested in it would be this double bottom right here, and that's just below $68. We'll call it $67 or so per share. So at 67, it starts to get interesting. Could go as low as 60 to 62 down there, but again, 67 is low enough where if we're looking at the intraday, we can see again, and let me flip off of this so we can see that. We can see that it's already at 72.90. So again, 72 is the even number. That would be a high risk level. I'm going to look more towards the 67 level as a safer trading opportunity. All right, let's go through a couple stocks that I think are worthy of keeping an eye on. Take a look at UPST. UPST has been in a downward channel, and UPST, guys, look at this. So notice how every time it gets up here, it sells off, but every time it gets to this lower level, it gets a bounce, right? Well, guess what? We just tagged the lower end a couple days ago, and the stock, again, is oversold in the near term. This is a AI stock, so again, we'll see if it kind of gets a bounce. You can see it traded as high as 70s. It's now basically around $23 per share. This one's starting to look interesting as a swing trade. Now, please understand, and I probably should have made that clearer, what we were looking at on stocks making big moves pre-market, that's day trading. Once we go to the daily chart and we're looking at daily channels, that becomes swing trading. So swing trading is different. Remember, when you're swing trading, you're holding for little periods, right? You're holding for days, weeks, maybe a couple months. Day trades, you're in and out the same day. So there is a difference there. Okay, so that's one of them that I wanted to point out to you guys. UPST, that's the symbol on that one. If we go to the next one, I think Chewy is worth a note here. So if we can see here, Chewy, I love the price action. So we've been seeing the stock market get trounced, right? The last few days, it's been coming down, bouncing a little bit today. But look at Chewy, it's starting to pop up. In fact, on Friday, with the markets down again, Chewy ended the day flat. Now, this is kind of that online pet food, pet stuff, distributor, seller. And the reason why I'm bringing this to your attention is, number one, relative strength is starting to flatten out here after being extremely oversold. Number two, if we are going into a recession, what do we know about recessions, guys? We know that in general, people don't all of a sudden change their habits for their pets. People love their pets. I love my pets. I'm sure you guys out there with pets, you love your pets. Are you all of a sudden you're going to stop buying food for your pet? No, you're going to buy it, right? So ultimately, that's the key, is it's somewhat recession-proof. Not totally recession-proof, but compared to other luxury items like watch dealers and car makers and so forth, you probably look at something like Chewy as being somewhat resistant to a bad recession. So just one of the ones to think about there. Now, in terms of a bounce, I gave you guys target number 1 at 23. Target number 2 is just below 30. Those would be your 2 target zones on the Chewy chart. Next up, let's take a look at Square. Square I brought to your attention prior. It had an awesome bounce. I'm bringing it to your attention again today. What do we know about Square? Here's your channel, right? Channel highs, right? And channel lows. Now, notice down here, this is the last time I brought it to your attention. It was right here, and it had about a 20 to 30% bounce right up. Now, it doesn't look that big on this bigger chart, but this was actually a 20 to 30% bounce. Well, now it's retraced back down, and you almost have a bottoming tail here. So I'm in the camp of saying this is probably due for another bounce on Square. And again, Square would be a rival to a PayPal, even a MasterCard or a Visa or an Amex type scenario there. But again, that chart looks very interesting to me. All right. Jumping over here, guys, we're going to continue through. I only have a few more minutes, but we're going to talk about Bitcoin and crypto. So again, Bitcoin, guys, continuing to hover up right into short-term resistance. Remember last week, I ended up taking profits on my Bitcoin longs and then ultimately inching in a very small short just above 35,000 here. Now, the kicker here is this, right, is that what's going on in Bitcoin is people are buying on anticipation of the approval of the spot ETF. Now, if that spot ETF gets approved, you're going to see a short-term pop, and then probabilities dictate it's going to be followed by a sell the news. Once it's approved, it'll be like, okay, well, now it's approved. What else is going to keep the price up? And it'll come back in just a little bit. Now, as long as you hold 31 to 32,000, that is your retrace buy level. All right, until it trades below. If it doesn't trade below, then you just buy there and you're good to go. If it trades below this level here, this previous pivot top that it broke above, then you have to start thinking further downside. But right now, respect that level. Now, I did just pre-market take profits with members of Verified Investing Crypto at verifiedinvesting.com on Cardano. We took about a 13% gain here. Take a look. This was my target right here. And again, look at the price getting right up above that 30-cent level. And again, I did take profits on that. So again, congrats if you're a Verified Investing Crypto member. Congratulations on that. Just quickly showing you guys here what the chart told me here. So again, and by the way, I want to be clear. Just because I unload here, right, pivot point here, it doesn't mean that price on Cardano isn't going to go up further. The reason you exit a trade is when probabilities become 50-50. So at this point, you now have a 50% chance of upside or downside, right? And so that's the key. And I think that's what a lot of people don't understand is that it doesn't mean because I exit a trade, it doesn't mean it can't go higher. It means that probability based is that it's now a gamble. It's pure and simple. It's a 50-50. It could go up or it could go down. My strategy is strictly to stay with the probabilities on my side. So as long as it's 60-40, 70-30, 80-20, I'm going to stay long. But once you get to this level here, that to me is no longer an investment. It is now a gamble. And again, if you're investing, you are not or you shouldn't be gambling. And I think that's really an important distinction here is to understand the difference. If you want to gamble, and I always say this to my members, is that if I want to go gamble, I'm going to get my friends together. We're going to go to the casino. I'm going to walk in with a few $1,000, whatever I want to do here, and I'm going to sit down, have drinks, have a great time, and I know that I'm going to be gambling and probably lose my money over time. When I invest, I'm not having the same fun as I'm having with my buddies, drinking and hanging out. This I'm doing to actually make money. So you have to understand the difference. One, you go have fun with your buddies, you expect to lose. This, I expect to win. And that's why I stick with the probabilities. Very, very important lesson there. All right, gold, let's touch on gold real quick. Gold continues to look pretty good to me here. Gold continues to hold right up in this range. I mean, this is a great move, guys. You guys know I've been bullish on gold. By the way, gold is now outperforming the S&P 500 for 2023. Think about that. Gold is now a better performer than the S&P 500 for 2023. Obviously, Bitcoin's the winner by a mile, at least at this point, and most likely by year end. All right, now again, eventually we're going to head up to that triple top. That'll be the big level to see if it breaks out. Silver chart, same kind of deal here, guys. You're coming up to resistance. Can it break out like gold? Silver has been lagging gold, but we'll watch to see if that breaks out. Oil, let's quickly touch on oil here. Head and shoulders pattern. All right, now a lot of people will say, oh, well, what if the Middle East erupts and gets crazier? Yeah, but you know what? The charts are charts. This is probabilities. I'm not going to speculate on what's going to happen in the Middle East. That's for people on TV to talk about all that kind of stuff. I'm a trader, right? So ultimately, if we break this line, you then do a measured move from here to here, and that ultimately takes you down somewhere in the $70 range. If we break this line, the line I would say is around $83. So we'll watch that, but the beautiful head and shoulders right there that we're watching to see if it breaks. All right, last chart I'm going to just show you real quick is URA. This is the uranium chart. I know a bunch of you guys are uranium fans out there. Uranium has already bounced once off of this level here. So notice here, and this was this pivot top. So now here it bounced. Now you don't rebuy at this level. No. Now you let it come to the next level, just below 23 on the URA. That becomes your opportune swing trading level on URA. All right, back to the center screen, guys. So much to talk about, so little time, but you know what? You guys get me 4 more days this week, 9 a.m. and to 9:20-ish, give or take a little bit. Thank you guys for tuning in. I got to get to trading with my members at InTheMoneyStocks.com and VerifiedInvesting.com. But again, folks, let's go make money. Remember, Fed on Wednesday. We have Thursday, we have some key data as well, Apple earnings. Friday, we have the jobs report. It is going to be intense. I will do my best to guide you guys through. Have a great rest of your day and a great week. Talk to you soon.